Welcome to Just Ask Freeman. My name is Cynthia Defazio, joined today by Freeman Owen Jr. He is president and CEO of Financial Sources Incorporated. Freeman, how are you today?
Just fine. Ready to get the show on, and it's a real pleasure to having you as my co-host. It's a real pleasure.
Freeman, it's an honor to be back with you again because we started way back when together and kind of segued in different directions. Life takes you in different directions. I'm honored to be here filling in for Rebecca, so thank you for having me.
And thank you for being here. Again, I'm looking forward to a great show for our viewing audience. The financial literacy that we offer. Let's get started.
Yes, please. Well, to our viewers at home, you might be wondering, what are we talking about today? Well, a topic that's on all of our minds right now, we're going to talk about taxes. When you enter the retirement years, does your tax bill just go away? Does it go down? What happens with taxes? We're going to ask Freeman for some guidance today because we know taxes can be a very scary terrain. But you can do one thing. Just ask Freeman. He has the answers.
I tell you.
Freeman, I have to ask you because obviously so many people in the viewing audience today, every time they turn on the news or the radio station while they're driving back and forth to a destination, they're hearing a lot of talk about taxes, and it's kind of scary.
I mean, it really is. And let's define first what taxes are all about.
Okay.
And then distinguish the difference between a professional that completes your tax returns for that particular year, and the tax planning that we do in our practice. Now, you have a CPA.
Yes.
Takes care of the 1040,
Yep.
takes care of the taxes of the present year or past years. But what about tax planning, what we do? Now, we know the tax is going to increase. So what we try to do is, with my clients, is to tell them, look, we're going to do some tax planning today, alrighty, such that we know that taxes will increase, but we also need to know how to minimize our taxes while our income increases in the same year.
So that is interesting, Freeman, because so often people think their taxes are going to go down when they hit retirement. That's not true all the time.
That's not necessarily true, yes. A lot of times, which we will discuss later on in the show, is required minimum distributions.
Okay.
There are, when there's a mandatory withdrawal to start taking monies from tax qualified plans, which place many of our viewing audience into a higher tax bracket.
Okay.
So what we try to do is, and do it successfully too, is to minimize taxes. Now, you can't evade, you can't avoid taxes, but to minimize taxes, again, while increasing our income.
Okay.
All righty.
So, Freeman, I have to ask you, overall, what is the benefit to really engage in tax planning right now, especially with some tax changes that are coming down the road? Why does tax planning benefit our viewers out there?
Well, different administrations, Congress, and times, taxes increase. Now, we know that, I don't want to date this, but in about another year, in a year and a half, taxes are increasing. And right now, this is where taxes are at its lowest point. So what we want to do is plan for tax increases over the next few years, or even further, 5 years, 10 years out. So we prepare ourselves for increased taxes, and we cannot run away, audience. We have to minimize our taxes, but we also have to be cognizant of the fact that, hey, I need to know how to maintain my income while not being exposed to increased tax rates, significant bites. So that's what we've been doing for the last, I guess over 40-some years now.
Wow.
Exactly, yes, and trying to our best to make sure that you understand how taxes work, how administrations impact taxes, and also how to make sure our income is not subject to tremendous tax increases. So we plan for that, Cynthia, over the years, and it's very, very important.
Sure.
One of the things I like to talk about, too, Folks don't realize it. There are basically three types or three avenues we can examine when it comes to taxes and when it comes to our income producing assets.
Okay.
Let's talk about the first set. We have or could have CDs,
Okay.
money market accounts, savings accounts, mutual funds, stocks. When we have those type of vehicles, we're taxed for the gains or for the interest earned in those particular investments, even if we do not use the interest that is earned, but yet is taxed.
Interesting.
How about the second set of instruments that are taxed?
Okay.
Now, tax-deferred accounts,
Okay.
401ks, TSPs, 403Bs, 457s. Those instruments we refer to as employer-sponsored retirement accounts. Now, we're not taxed in the year of which there may be gains in those tax-qualified plans,
Okay.
but eventually we will on distribution.
Okay.
Right? Now, what about IRAs?
Yes, let's talk about that.
We're taxed on individual retirement accounts.
Okay.
And that's why I have my text, which is called the 10 IRAs, of which there are tax traps.
Yes.
We may be able to see that, the top 10 IRA mistakes.
Yes, excellent book.
Again, distributions from these tax qualified plans are taxable, but while we're contributing to employer-sponsored retirement accounts and IRAs, we have the opportunity there, contributing to them. We're not taxed in the year we make those contributions.
Okay.
All right. Now, third one, tax-free.
Ooh.
I'll tell you.
I like that one.
All righty, tax-free. All right.
That's fast.
Let's look at the Roth IRA,
Okay.
the Roth 401k, even life insurance, where there's tax-free distributions and the death benefit is also non-tax. That is tax-free too. So what we have, Cynthia, three categories.
Yep.
The taxable vehicles. Again, I like to repeat, our savings accounts, CDs, money market accounts, mutual funds, stocks, and even the mutual funds may be taxed anywhere between 0 to 20%.
Okay.
And those type of vehicles were taxed in the year of which interest or dividends are applied to those instruments. And even though we might not use them, we might not use that interest, we're still taxed on those vehicles. Then I just want to reiterate again, tax qualified plans.
Okay.
Your 401ks,
Yep.
your TSPs, they're employer-sponsored retirement accounts with restrictions on distributions. So while the monies are going into those vehicles, we're not taxed until there's a distribution. And finally, tax-free investments that you can have, such as a 401k, Roth, you can have an IRA, a Roth IRA, no taxes, and of course insurance is excellent for tax-free distributions, tax-free death benefit. Those are the three major categories of investments. And a lot of our viewers are looking at like, I have some of those instruments. And I'm unaware that, I was not aware that the three categories that we just mentioned, how do I take my money and those funds are distributed from each of the instruments that we talked about?
Well, Freeman, we're coming up to our first commercial break, but you and I both know they have to do one thing. Just ask Freeman.
Just ask Freeman, a person that you can trust. I've been in business, 40 some odd years now, 45, 46
Amazing.
years. And let me give a big shout out to my existing clients, over 4,000. You have trusted me with your providing financial literacy, helping you understand your taxable type instruments. Those are the non-taxable, as well as other financial literacy on distribution of these various instruments and minimizing our taxes while increasing our income. So as you mentioned, we're going to take a quick break here.
Yes.
All righty. And if you want to know how to classify these different instruments, just ask Freeman. That's all you have to do. Scan that QR code. And I tell you what I like to do is have at least 10 of our viewers to scan that code, sign up for their free consultation, get someone that is trustworthy. Anytime you have 4,000 clients over 40 some odd years that trust you with millions of dollars in these various instruments we talked about.
Yes.
And what did you do? Just ask Freeman, and that's what you did, and that's what I'm asking my viewers to do. So do you understand these various tax questions, how to minimize taxes and get a great distribution on increasing your income?
Perfect, Freeman. Thank you so much. To our viewers at home, as you know, one thing to do, just ask Freeman. That number to call in and claim your complimentary consultation is 833-414-7233. If you have your smartphone handy, go ahead, grab it, click on that QR code at the bottom corner of your screen. That will take you right to Freeman's landing page, and you can claim your spot accordingly. To our viewers at home, don't go anywhere. We're talking all about taxes today. We talked about taxable asset classes, tax-deferred, tax-free. We're going to dive in even further with Freeman when we return. Stay tuned.
I was a student at Howard University and was transferred over to Federal City College at that time. I got a couple of degrees in mathematics and statistics. I worked as a mathematician, mathematical statistician. Climbed the ranks there, reached a pinnacle in my late 20s. This opportunity in the financial services world spanned it now over 40 plus years. It all started with me having an interest in mathematics, science, technology, and engineering. Started in the business, got licensed. I didn't have any fear. Let me share a personal story. I've been married to the same lady for 51 years. When I quit working as a mathematical statistician, she says, well, you've been successful in everything else. I'm 27 years old at the time. You'll be successful in this. And there was no looking back. I'm not the type of person that could work a job per se. I had to have, and a quote, I got this from a great mentor, freedom with responsibility. Because I always say, if you do this, you get nothing back. But if you do this and give, blessings flow. And that's basically how I started in this business and how my career started. Well, I have two careers, the first one and, of course, this one, which I love the best.
Welcome back to Just Ask Freeman. My name is Cynthia Defazio, and I am joined today by Freeman Owen Jr. He is president and CEO of Financial Sources Incorporated, and we are talking all about taxes today, the difference between tax preparation and tax planning. So thank you for joining us. Freeman, this is a very important episode because people just have been with us and now they've learned there's taxable, tax-deferred, and tax-free investment classes. But I want to ask you a very important question as we open up this segment.
Right.
Where are we exactly right now, Freeman, in tax history? Where do we currently stand?
Well, at this point in time, I might have mentioned the fact that the taxes are at its lowest point in history. Okay. But I know in a year or 2 years, this tax code is going to change. Taxes are going to go up. And I love it. My clients have come in the office and we get to know each other. And I tell them I have financial, I have a fiduciary responsibility to look out for their best interest.
Absolutely.
And they're concerned about taxation. One of the questions, Freeman, now I heard you talk about tax deferral. Would you mind defining that for me? I've heard you talk about taxable distribution. And our conversation will start centering around taxes after we've done some of our preliminaries, to getting to know each other, family members and so on, about the client. I always like to know about the client. But they've said things like, I'm in a high tax bracket. What can you do? Just ask Freeman.
That's right.
I have the solution to minimize the taxes on your nest egg. And what is interesting too, there is the accumulation phase in which we are young employees and we start to contribute to what we call the TSP if you're a federal employee, the 401k if you're in the private sector, the 403b, I know them all. If you're an educator or administrator and you are a state employee. And some of the questions that are asking me, now Freeman, I never had to pay taxes now. I contributed for 25 to 30 years. And then I kind of raised my hand. I said, now we're in the distribution phase coming up here. You're age 50, 55. Matter of fact, we're going to talk some more about the ages of which taxes can impact us on distribution of certain instruments.
Yes.
All right. So we discuss tax planning. Let me give you a good example. Gentleman came through. He's a stand-up comic.
Okay.
I was able to roll over for him over $1 million, but he's 58 years old.
Okay.
All right. Now he worked in the private sector, and they laid him off. Now they let him go, but still he is a stand-up comic. He does this other work.
Okay.
Now he's 58. He's not able to he wouldn't have been able to access or take control of that employer. Let me put a little emphasis on that.
Okay.
Sponsored retirement account because he was under the age of 59 and a half. Had a solution.
Okay.
Since he had separated from service or had been laid off, he was concerned that he may have to take his Social Security benefits at age 62. I said, no, you're not. You don't have to do that.
Okay.
As a matter of fact, you could take your Social Security benefit at full retirement age and still work and make all the income you wish. Well, I set up a plan for him using a tax-deferred account. We did a direct rollover of that $1 million and separated and partitioned it into $250,000 fixed annuities.
Wow.
And one annuity, which we used, was a SPIA, a single premium immediate annuity.
Okay.
Which generated income in 30 days.
That's fantastic.
But the beautiful thing about that, he was suitable for it.
Okay.
We set up his income from age 58 all the way up to full retirement age 67.
Wow.
We gave him 9 years of immediate income. He was very, very happy at how I partitioned his the other piece of his rollover, which were IRAs, and we put into effect a Roth conversion strategy.
Wow,
It's
that's
amazing.
amazing.
And we're going to talk about annuities a little. It's going to be, like you call it, the A word.
The A word. Yes, we have a whole episode about that because people have so many questions about annuities as well.
Exactly.
Of course, taxes being today, but yes.
So we were able to set aside, and I've done that several times with high net worth people.
Okay.
As a matter of fact, if you have $250,000, $500,000, or $1 million, and we could take a piece of that, of those investments, and set up tax-deferred accounts, and you ready for this? Tax-free accounts as well.
Yes, yes.
Because a viewing audience, I know that when you come to see me, one of the questions you ask, Freeman, am I going to, I got all this money, will I have to pay taxes? Yes, you do have to pay taxes, but you have to minimize your taxes.
Yes.
And you need an advisor that is looking out for your best interest. And let me thank my clients again.
Sure,
Thank
please.
you for the years of trust. You trust me with millions of dollars who have taken care and had solutions for the distributions from some of your taxable items or vehicles, as well as the tax deferred. Having that knowledge is power. Showing you a way to minimize your taxes.
Absolutely.
People, well, I don't want to pay taxes. Yes, you do. You have to. But you need a professional that takes the time and look out for your best interest and show you a roadmap of minimizing taxes while increasing your income.
Freeman, there's no one better than you. To our viewers at home, you're in the audience today and you're asking yourself, should I just ask Freeman? Well, the answer is yes. You should ask Freeman all of your questions about tax planning, retirement planning, anything financially related. As he's already stated, he's very trustworthy. Everyone loves Freeman, and he has the answers to all of your tax questions and your specific situation. Just call into 833-414-7233. If you don't have your pen handy, that's okay. You can grab your smartphone. This is so easy. Click on that QR code at the bottom corner of your screen, and you can claim your spot with Freeman accordingly. We're going to take a very short commercial break here on Just Ask Freeman, but don't go anywhere. We are taking a deep dive into tax planning. We have so much more when we return.
I focus in on making sure that folks have emergency funds, credit card debt taken care of, no big ticket items to purchase on this journey. I ask them about their health. What role will they play? Do you have siblings? Do you have dependent children? I've had breakout workshops, especially for the young people, so they have financial literacy as they approach even for college. I used to do dinner seminars. I'd invite existing clients to bring people, think about their birthdays and so on. Just people want to know that you are concerned about their best interest, and that works well. It's very, very enjoyable type of work that you can do. And these folks prosper with just a little bit of adjustment to their retirement planning.
Welcome back to Just Ask Freeman. My name is Cynthia Defazio, joined today by Freeman Owen Jr. He is President and CEO of Financial Sources Incorporated. In this segment, we're going to talk all about the tax toolkit. I have to ask you, Freeman, what is this? What is the tax control toolbox, if you will? Toolkit. Is there a hammer in there?
Well, it may be. I'll tell you what, we know how to minimize our taxes, that's for sure, because as it mentioned that the tax codes change with administrations. And it's very important to sit down with that client and plan out not 1 year, not 5 years, 10 years.
Yes.
And to protect their investments that they have, to make sure that they understand, and I mentioned earlier, distributions, and avoid costly mistakes when taking distributions from investments in which you made contributions and you weren't taxed at that time. Let me give you a good example of how we bring to the table knowledge on distribution of taxable accounts like the 401k or the TSP or the IRA.
Okay.
Traditional IRA. Now, some folks prior to meeting me had made the mistake of making withdrawals from their tax qualified plans, totally unaware that the distribution, I'm gonna give you two examples. The distributions from tax qualified plans, you need the tools to know like, if I take $100,000 out of my $500,000 IRA, what would happen? Or if I want to buy an automobile, which is a depreciating object. I saw them make mistakes, $100,000 for an automobile, and they took that distribution from a 401k or a TSP. And then what's bad about it, they're 59, not quite 59 and a half. That's why those big numbers, we're going to go through that.
Important.
They're important.
Yes.
They get a check for $70,000, and they're upset. Again, they're educated people. Good folks, you're educated, but you never had the opportunity or had the privy of financial literacy.
Yeah.
That is a $30,000 tax spike. Now, there's a way. Let's talk about distributions when it comes to what we call required minimum distributions.
Okay.
All right, there's going to be a mandate for that. That is a mandatory withdrawal from your tax qualified plans.
Okay.
I got the solution. We know that if we take the required minimum distribution or the mandatory withdrawal from a tax-qualified plan like a employer-sponsored retirement account, that withdrawal does not satisfy what we call the RMD,
Okay.
all right, or required minimum distributions for any other tax-qualified plans like the IRA. You are required to take the RMD from your 401k or TSP. We've got the new age for taking that distribution now, which we'll mention on another show.
Sounds good.
All right. For a traditional IRA, you can take a withdrawal from one IRA. Let's say you have multiple IRAs, traditional IRAs. You can take the distribution from one IRA to satisfy all, let's say five IRAs.
Wow.
But the withdrawal from the tax qualified plan referred to as an employer-sponsored retirement account, you have to take the RMD to satisfy just that tax qualified plan or employer-sponsored retirement account. A lot of folks don't know. And what they
No.
need to do, just ask Freeman.
They need to just ask Freeman. And Freeman, only a minute and 15 seconds left of the show. What final words do you want to say
what
to
they
our
need to
loving
do
viewers?
is get their spot.
Okay, claim it.
Claim it. Claim your spot. Scan that barcode. I can see it. And the other, when we asked for 10 folks the last segment,
Yes.
we got 9 so far. Let's get 10 more on top
Okay.
of that. Just ask Freeman and call us at 833-414-7233. There's a landing page there. Your consultation, absolutely free. I do not charge fees. I'm compensated by the various companies I represent. And I do my due diligence to find you the best companies to protect your principal and to minimize your tax bite. Again, folks, just ask Freeman. Call us at 833-414-7233. Claim your spot. I like the way you say that, too.
Thank you, Freeman. To our viewers at home, this is your opportunity to claim your spot today. 833-414-7233. Be safe, be happy, and be blessed most of all. We'll see you back 1 week from today on Just Ask Freeman.